Hi everyone, today we are going to discuss results of ICICI Lombard General Insurance Company. The insurer reported a very strong performance in Q2 with net profit increasing by 44% on a year-on-year basis. Even if we adjust for one-off impact, the net profit growth was healthy at 25%. So let us discuss the key highlights of the performance of the insurance company. The first is the healthy growth in premium. ICICI Lombard reported healthy growth in premium with gross direct premium income increasing by almost 11% on a year-on-year basis. This was slightly lower as compared to the industry growth, which was at 13%. However, this does not bother us much because this is in line with management's earlier stated strategy to pursue only profitable growth. The company has let go of certain businesses where there was an aggressive pricing strategy adopted by competition. The second highlight of its performance was the improvement in operating performance. The combined ratio, which is the measure of insurance companies' profitability, improved for ICICI Lombard at 101% as compared to 103% last year. The improvement in combined ratio was aided by fall in or decline in expense ratio from 24% last year to 21% in current quarter, though the loss or the claims ratio increased or deteriorated, and this was mainly due to floods in Kerala. So if we have to talk about the Kerala floods, the insurance industry as a whole was impacted adversely, and the losses are estimated to be around 2,000 crores on a gross basis for the industry. ICICI Lombard's share in the gross insured losses at 66 is around 66 crores and around 25 crores on the net basis post reinsurance. Since its share is at around 3.3% of the gross insured losses of the industry, it demonstrates its ability to grow the business profitably despite the underlying volatility in the core underwriting business. Since we all know that for an insurance company, the underwriting losses are offsetted to certain extent by the investment income, and the investment performance of ICICI Lombard was also pretty healthy. The investment book increased by almost 15% on a year-on-year basis. The realized return was at 5.2%, which was again stable as compared to the last year. Going ahead, we expect that the increase in the interest rates will benefit the insurance player. This is mainly because 80% of its investment book consists of fixed income securities. Since the portfolio is held till maturity, the insurance player does not have to take mark-to-market hit. At the same time, its investment income increases with the increasing in the interest rates. The most important highlight of the performance is the opportunities in the sector. As we all know that the general insurance sector in India is in a very sweet spot. The sector has grown at a very healthy rate of around 17% compounded annual growth rate for the last 17 years. Going ahead also, we expect the sector to deliver mid-teen growth, and there are many growth levers for the same. For example, the regulations are also very progressive and are supportive of industry growth. The recent Supreme Court mandate of making a third-party motor insurance for new vehicles and for two-wheelers for a longer term is very helpful and is a positive development. This will help the well-entrenched players like ICICI Lombard and will help in the premium growth. So talking about the outlook for ICICI Lombard, we think that ICICI Lombard is poised for earnings growth in future, and this will be mainly aided by increase in insurance penetration, focus on profitable segment, and improvement in operating efficiency. We have seen that the stock has already outperformed the broader market, that is Nifty, on a YTD basis. The valuation of the stock is rich because it trades at around 7 times its trailing book, though the return on equity is also very healthy at around 24%. We have seen that leading companies in a secular growth sector tends to trade at a higher multiple. Because ICICI is the only listed general insurance company in the private sector, it trades at a premium valuation. So while the premium valuations might sustain, we think that the near-term upside to the stock is limited because of the rich valuations. Nevertheless, the investors who are long-term and looking to invest and participate in the growth story in the general insurance sector, ICICI Lombard is worth a consideration.